Expert Insights analysts predict a surge in digital currency adoption rates to 25% globally by early 2026, influenced by economic reforms proposed at Davos 2025. Date: January 24, 2025. Event summary. Analysts at the World Economic Forum WEF 2025 held in Davos from January 20 to 24 have projected a significant surge in digital currency adoption, potentially reaching 25% globally by early 2026. This anticipated increase is largely attributed to economic reforms discussed during the forum, particularly in light of regulatory changes expected in the United States under a renewed pro-crypto administration led by Donald Trump. Key insights and predictions from the forum. 1. Regulatory influence. The WEF sessions placed a strong emphasis on the evolving regulatory landscape. With Trump's return to office, his administration's promotion of a new cryptocurrency Dollar Trump is expected to catalyze favorable legislation for the cryptocurrency sector. Brian Armstrong, CEO of Coinbase, highlighted that clear regulatory frameworks could greatly stimulate innovation and adoption within the industry. He noted that if the U.S. were to establish favorable crypto laws, it could set a precedent for G20 nations to follow suit. 2. Economic growth and financial systems. The discussions underscored the necessity of reimagining growth in a post-pandemic world, with the International Monetary Fund (IMF) projecting a global growth rate of 3.3% for 2025. As inflation rates are expected to decline, central banks may return to more normalized monetary policies, subsequently creating a more conducive environment for digital currencies. 3. Technological advancements. Speakers including Danelle Dixon from the Stellar Development Foundation discussed blockchain technology's potential to enhance transaction efficiency and reduce costs. Successful applications of blockchain in humanitarian aid, which allows for rapid fund distribution, were cited as examples of its transformative utility. This showcases how digital currencies can facilitate global transactions and streamline processes, paving the way for broader adoption. 4. The adoption curve. Armstrong drew parallels between the current state of cryptocurrency adoption and the initial phases of the Internet. He forecasts that cryptocurrency usage could reach half of the global population over the next 10 to 15 years. However, he and other experts stressed the importance of improving user experience and privacy features to support this growth trajectory. 5. Challenges ahead. Despite the optimistic outlook, experts acknowledged existing challenges. Jennifer Johnson, CEO of Franklin Templeton, pointed out that many traditional finance professionals are unaware of the rapid advancements in the cryptocurrency space, and the current regulatory uncertainty remains a significant barrier to widespread adoption. 6. Global economic context. The backdrop of the forum included discussions on economic fragmentation and rising public debt, particularly in developing economies. The IMF highlighted that public debt levels in these nations could impede innovation and economic resilience, casting a shadow over the potential for digital currency growth. Timeline of events. January 20 to 24, 2025, the WEF annual meeting took place in Davos, focusing on economic growth and finance with substantial discussions surrounding digital currencies. January 21, 2025, key sessions explored the impact of regulatory frameworks on the cryptocurrency landscape, emphasizing the need for clarity and adaptability in legislation. Early 2026, analysts predict that digital currency adoption may reach 25% globally, contingent upon the successful implementation of proposed reforms and regulatory clarity. Conclusion. The insights gleaned from the WEF 2025 indicate a convergence of regulatory clarity, technological advancements, and economic imperatives, positioning the world on the cusp of a transformative shift in digital finance. Experts agree that clear regulations and user-friendly technologies are critical to achieving the projected surge in digital currency adoption, which could significantly enhance global economic participation and operational efficiency. Sources: World Economic Forum articles on cryptocurrency and economic growth. Keynotes and panel discussions from WEF 2025. This report synthesizes the key highlights and predictions surrounding the future of digital currencies as discussed at the World Economic Forum 2025. For more detailed insights, please refer to the official WEF publications and session summaries. Counterintuitive insights from the content provided include: 1. Regulatory clarity as a double-edged sword. While many view the establishment of clear regulations as a positive step for digital currency adoption, the content suggests that this clarity is urgently needed because paradoxically many regulators do not fully understand the technologies they are regulating. This lack of understanding could lead to regulations that stifle innovation instead of fostering it. 2. Economic growth amidst fragmentation. Despite projections of a steady global growth rate of 3.3% for 2025, experts at Davos expressed that this growth is accompanied by increased economic fragmentation. This is counterintuitive because one might expect that a stable growth rate would correlate with unity and cooperation in the global economy rather than fragmentation. 3. Public debt versus economic innovation. The discussions highlight the alarming levels of public debt in developing economies, suggesting that these conditions will stifle innovation and economic resilience. This poses a counterintuitive notion that countries with high debt levels may also be the ones that need to innovate the most to overcome their financial burdens. 4. The role of the U.S. in global crypto regulation. Analysts predict that the U.S. will lead the way in favorable crypto regulations, which might prompt other G20 nations to follow suit. This is counterintuitive since traditionally, regulatory frameworks in powerful economies are often seen as restrictive rather than enabling. 5. Perception of digital currency. There is a consensus among experts that many in traditional finance are unaware of the rapid growth in cryptocurrency. This suggests a disconnect where the financial sector, traditionally seen as forward-thinking, may actually be lagging behind in understanding and potentially leveraging new financial technologies. 6. The adoption curve. The comparison of crypto adoption to the early days of the Internet implies that despite current skepticism, the potential for rapid growth exists. This contrasts with the common belief that widespread adoption of new technologies is linear and straightforward, suggesting a more complex nonlinear trajectory for digital currencies. 7. Tech utilization for humanitarian aid. The use of blockchain technology for humanitarian aid, facilitating peer-to-peer transactions in under 3 minutes, contrasts with the often negative portrayal of cryptocurrencies in mainstream media. This demonstrates how digital currencies can have practical beneficial applications contrary to typical narratives focusing on their volatility and speculative nature. 8. Illusion of simplicity in user experience. The assertion that most people don't understand how electricity works but can use it effortlessly highlights that the complexity of technology does not always hinder its adoption. This challenges the assumption that user-friendly interfaces alone are sufficient for mass adoption of digital currencies, suggesting deeper educational efforts may be necessary. 9. Financial independence versus regulation. The belief that clear regulatory frameworks will enhance economic freedom is counterintuitive because it implies that regulation, often seen as a constraint, can actually empower economic participation and innovation among individuals in developing nations. 10. Technological growth versus financial literacy. The notion that crypto could significantly lift billions out of poverty through improved financial infrastructure. Despite the existing barriers of public debt and lack of financial literacy, challenges the assumption that economic growth must first be achieved before technological solutions can be implemented. These insights reflect a complex interplay between regulation, economic conditions, technological advancements, and societal perceptions that challenge conventional wisdom regarding the growth and adoption of digital currencies. The report on the anticipated surge in digital currency adoption rates and the economic reforms proposed at Davos 2025 is rich with insights, yet several key aspects may be overlooked by many readers. Here are those important points along with explanations of their significance. 1. The role of political leadership in regulation. The return of Donald Trump and his promotion of a new cryptocurrency $Trump is a pivotal factor influencing future regulations. Many might dismiss the political angle as typical political maneuvering. But this is significant because strong political endorsement can lead to expedited regulatory processes. A clear regulatory framework fosters innovation, as noted by Brian Armstrong of Coinbase. This could set a precedent for other G20 nations to follow, potentially tipping the scales in favor of wider digital currency adoption. The implication is that political climates directly affect financial regulations and thus innovation and economic growth. 2. Blockchain technology's humanitarian applications. Denell Dixon's discussion on blockchain's role in humanitarian aid is likely to be overlooked. While many focus on cryptocurrencies as financial tools, the transformative potential of blockchain in enhancing the efficiency of aid distribution illustrates its broader societal benefits. This highlights a significant aspect of digital currencies that transcends mere speculation or investment. It shows their utility in improving lives, particularly in crisis situations. Acknowledging this could lead to increased support for blockchain initiatives. Influencing public perception and policy. 3. Economic context and global debt levels. The report mentions rising public debt levels, particularly in developing economies, which is a critical factor that can stifle innovation. While many readers may focus on the optimistic projections of growth and digital currency adoption, the underlying issue of debt could negate these advancements. High debt levels limit government spending on essential services, including education and health, which are crucial for creating a skilled workforce that can engage with and innovate within the digital economy. This economic backdrop serves as a reminder that without addressing foundational economic issues, technological advancements may not translate into widespread benefits. 4. The adoption curve and user experience. Brian Armstrong's comparison of the current state of crypto adoption to the early days of the Internet is a powerful metaphor that may not resonate with all readers. Understanding that digital currency adoption faces similar hurdles, such as user experience and technological complexity, can provide insights into how to facilitate broader acceptance. Simplifying access and enhancing privacy features are essential for mass adoption, yet these practical challenges are often overshadowed by the hype surrounding cryptocurrency investments. Recognizing these barriers is crucial for stakeholders aiming to develop solutions that encourage wider participation in the digital economy. 5. Economic fragmentation and global cooperation. The theme of economic fragmentation discussed at Davos is likely to be underestimated. As nations adopt protectionist policies, the risk of divided economic systems grows, which could hinder the seamless integration of digital currencies. This fragmentation could lead to significant inefficiencies and barriers to international trade and investment, ultimately slowing down the adoption of digital currencies. Understanding the interconnectedness of global economies is vital for stakeholders in the crypto space, as a fractured market may limit opportunities for growth. 6. Potential for economic freedom. The remarks by Brian Armstrong about the potential of digital currencies to lift billions out of poverty by providing financial infrastructure to underserved populations highlight a transformative vision that may not be fully appreciated. The idea that digital currencies can democratize access to financial services is not just about convenience, it represents a fundamental shift in how economic participation can be realized globally. This potential for economic freedom should be a focal point for policymakers, NGOs, and businesses alike, as it aligns with broader goals of reducing poverty and enhancing economic resilience. 7. Technological integration with traditional finance. The need for integration between traditional finance and digital currencies is a crucial theme that may not receive adequate attention. Jennifer Johnson emphasized the challenges faced by traditional financial institutions in adapting to new technologies. This gap is significant because the success of digital currencies depends on their acceptance and integration into existing financial systems. Innovations in payment systems and smart contracts could redefine financial transactions, but without the cooperation of traditional finance, such advancements may struggle to gain traction. 8. The human factor in economic growth. The emphasis on the need for a skilled workforce and the potential for job creation in the digital economy, particularly in regions like Africa, is a critical point that may go unnoticed. Economic growth is not just about numbers, it is fundamentally about people. The future of work will demand new skills, and the ability of economies to adapt to these changes will determine their resilience and capacity for growth. Focusing on education and training in digital currencies and blockchain technology is essential for preparing future generations to thrive. In conclusion, while the report provides a comprehensive overview of the projected rise in digital currency adoption, the nuances of political influence, technological potential, economic context, and the human element are vital to understanding the full scope of its implications. Addressing these often overlooked aspects will be crucial for stakeholders aiming to navigate the evolving landscape of digital finance effectively. 1. Regulatory influence and political climate. The anticipated surge in digital currency adoption is closely linked to the evolving regulatory landscape. Particularly in the U.S. under a pro-crypto administration led by Donald Trump. Analysts highlight that if the U.S. implements favorable regulations, it could set a precedent for other nations, particularly within the G20. This regulatory clarity is seen as essential for innovation and could significantly reduce barriers that have previously hindered broader adoption of cryptocurrencies. 2. Economic growth and financial systems. The discussions at the World Economic Forum revolved around reimagining economic growth in a post-pandemic world. With a projected global growth rate of 3.3% for 2025 and a decline in inflation, the normalization of monetary policies among central banks could create a more conducive environment for digital currencies. This context is crucial as it suggests that economic reforms will not only influence adoption rates but also the overall financial ecosystem in which these digital currencies operate. 3. Technological advancements and blockchain's utility. Experts emphasize the transformative potential of blockchain technology, particularly in enhancing transaction efficiency and reducing costs. Real-world applications such as humanitarian aid distribution showcase blockchain's capability to improve transaction speed and transparency. The ability to streamline processes presents a compelling argument for the mass adoption of digital currencies, further supported by the need for user-friendly technologies to simplify access for the average consumer. 4. Challenges to mass adoption. Despite the optimism surrounding digital currency adoption, significant challenges remain. A lack of understanding and clarity in the regulatory framework poses barriers to widespread acceptance. Traditional finance sectors often remain unaware of the rapid growth in the cryptocurrency space. There is a consensus among experts that addressing these educational gaps and improving user experiences, including privacy features, are critical for overcoming obstacles to mass adoption. 1. The Gold Standard Reform 1933 to 1934. The United States under President Franklin D. Roosevelt moved to abandon the gold standard in favor of a managed currency system during the Great Depression. This reform aimed to stabilize the economy and stimulate growth by allowing more flexibility in monetary policy. Similar to the proposed reforms at Davos 2025, this shift was influenced by a dire economic environment and aimed to facilitate broader economic participation and recovery. 2. The Bretton Woods Conference 1944. In the aftermath of World War II, representatives from 44 countries met in Bretton Woods, New Hampshire, to establish a new international monetary order. The conference led to the creation of the International Monetary Fund (IMF) and the World Bank, setting the groundwork for global economic cooperation. The discussions surrounding global financial systems at Davos 2025 echo the collaborative spirit of Bretton Woods as nations sought to create a framework that would promote stability and growth in a rapidly changing world. 3. The introduction of the euro 1999, the launch of the euro as a common currency among 11 European nations was a significant step towards economic integration in Europe. This initiative aimed to facilitate trade, reduce currency exchange risks, and promote economic stability across member states. The discussions at Davos 2025 regarding digital currencies and regulatory frameworks can be likened to the establishment of the euro, as both represent transformative changes intended to enhance economic cooperation and efficiency on a global scale. Analysts are optimistic about the future of digital currency adoption, predicting a significant increase to 25% globally by early 2026. This surge is largely influenced by economic reforms discussed at the World Economic Forum (WEF) in Davos 2025 as global financial systems and regulatory landscapes evolve. Key predictions for digital currency adoption. 1. Regulatory changes. The anticipated return of Donald Trump to the U.S. presidency is expected to usher in a pro-crypto regulatory environment. Experts believe that clear regulations will foster innovation and adoption, setting a precedent for other G20 nations to follow. If the U.S. government creates a favorable legislative framework, it could catalyze a global shift toward digital currency acceptance. 2. Economic growth and stability. The WEF sessions indicated a projected global growth rate of 3.3% for 2025, coupled with decreasing inflation rates. As central banks normalize monetary policies, the economic environment will be more conducive to digital currency operations. This stability could encourage businesses and consumers to adopt digital currencies as alternative financial instruments. 3. Technological advancements. Blockchain technology is expected to play a pivotal role in enhancing transaction efficiency and reducing costs. Successful applications of blockchain in sectors such as humanitarian aid demonstrate its potential for broader adoption. Continued technological innovation will facilitate seamless digital transactions, making cryptocurrencies more appealing to the general public. 4. Adoption curve. Comparisons are being made between the current state of cryptocurrency and the early days of the Internet. Experts like Brian Armstrong project that within the next 10 to 15 years, as many as half of the global population could be using digital currencies. Simplifying user experiences and enhancing privacy features will be crucial to driving mass adoption. 5. Challenges to overcome. Despite the optimistic outlook, there are notable challenges, including a lack of understanding and clarity in regulatory frameworks. Many traditional financial institutions remain unaware of the rapid growth in crypto markets, which poses barriers to wider acceptance. Overcoming these hurdles will be essential for achieving the projected adoption rates. 6. A global economic context. The backdrop of economic fragmentation and rising public debt in developing economies presents further challenges. High debt levels could stifle innovation and economic resilience, potentially hindering the growth of digital currencies in these regions. Timeline of anticipated developments. 2025, the WEF annual meeting in Davos serves as a platform for discussions on economic reforms and the future of digital currencies, influencing regulatory changes and setting the stage for greater adoption. Early 2026, analysts predict that digital currency adoption rates could reach 25% globally, contingent on the successful implementation of proposed reforms and favorable regulations. Conclusion. The convergence of regulatory clarity, technological advancements, and a supportive economic environment positions digital currencies for a significant leap in adoption. The discussions at Davos highlight a consensus on the importance of clear regulations and user-friendly technology in facilitating this transition. While challenges remain, the potential for digital currencies to enhance global economic participation and efficiency is substantial, marking a transformative moment in the financial landscape.